Probability-based thinking demands one non-negotiable behavior. When a signal meets your predefined criteria, you execute without hesitation. Not because you feel confident, not because the last trade was a winner, but because the signal exists. The moment you start asking, should I take this one? You have already stepped out of probabilistic trading and into subjective judgment. And subjectivity is where consistency dies. A trading system is not designed to win on any single trade. It is designed to win across a large sample size. In US markets, whether you're trading the S&P 500, NASDAQ futures, or liquid stocks, the edge of a system only reveals itself after dozens, sometimes hundreds of executions. That edge cannot survive selective participation. If you hesitate, you filter trades. If you filter trades, you distort outcomes. If you distort outcomes, the statistics no longer apply. At that point, you are no longer trading a system. You are trading opinions, your opinions, shaped by fear, memory, and recent pain. True objectivity appears only when execution becomes mechanical. Signal appears to criteria, met to order placed. No debate, no inner dialogue, no emotional vote. This is not recklessness. This is discipline in its purest form. When you execute without hesitation, you remove yourself from the outcome. Losses stop meaning failure. Wins stop meaning validation. Each trade becomes just one data point inside a much larger equation. And that is where probability finally gets the room it needs to work. Most traders fail not because their system doesn't work, but because they interfere at the exact moment they should disappear. You don't make money by predicting which trade will win. You make money by letting probability express itself over time, uninterrupted. That requires courage, yes, but more than that, it requires surrender. Surrendering control over individual outcomes, so the system can do what it was designed to do. How the brain breaks the trading equation. Let's slow this down and be very precise about what's actually happening. Your trading system is built on a simple equation. Edge times discipline times large sample size equals profit. Every part of that equation matters. Remove just one, and the entire structure collapses. Hesitation is the silent variable that destroys all three. When a valid signal appears and you don't execute immediately, your brain steps in and says, "Let me evaluate this one." But here's the problem. Your brain is not evaluating this trade. It's evaluating similarity. It scans past experiences. It remembers failed breakouts. It recalls recent losses. And the moment it detects resemblance, it links them together. To the market, this is a new event. To your brain, it's that same situation again. That's where the equation breaks. You hesitate. You size down. You wait for extra confirmation. Or you skip the trade entirely. And notice what happens next. You systematically avoid winners that come after losses. You participate more when confidence is high. You disappear when probability is most needed. Over time, this creates a devastating distortion. You don't remove risk. You remove positive expectancy trades. The system keeps its losers, but you filter out a portion of its winners. At that point, even a mathematically sound strategy turns negative. Not because the market changed, not because volatility shifted, but because execution became conditional. The market doesn't punish you for being wrong. It punishes you for being inconsistent. The moment execution depends on how you feel, probability no longer works for you, it works against you. This is why professional traders don't aim to feel ready. They aim to be structurally incapable of hesitation. Because the real edge isn't the setup. The edge is executing the setup even when your brain begs you not to. The long-term consequences. This is the painful part. The real damage of hesitation doesn't show up in one bad day. It shows up slowly, quietly, over months and years. At first, it feels harmless. You skip a trade because the context feels off. You reduce size because the last few didn't work. You wait for extra confirmation because this one looks risky. Nothing explodes. Your account doesn't blow up. But something far more dangerous begins to erode. You stop trusting your setups. Every missed winner becomes evidence. Not that probability works, but that you can't read the market anymore. And every loss you do take feels heavier because you passed on trades that could have offset it. Over time, a destructive cycle forms. 1. Losses create fear. 2. Fear creates hesitation. 3. Hesitation creates missed winners. 4. Missed winners destroy confidence. 5. Destroyed confidence leads to rule changes. You start tweaking entries, adjusting stops, adding filters, removing trades, not because your system is broken, but because you are no longer objective. And here's the hardest truth to accept. Most traders don't fail because their strategy stops working. They fail because they stop executing it cleanly. The market didn't change. Volatility didn't betray you. Liquidity didn't disappear. Your relationship with uncertainty did. Once trust is gone, every chart looks threatening. Every setup feels suspicious. Every decision feels heavy. That's when trading becomes exhausting. You're no longer managing risk. You're managing fear. You're no longer following rules. You're negotiating with memory. And the cruel irony? The more you try to protect yourself, the further you drift from the very process that once gave you an edge. This is not a technical problem. It's a psychological one. And until it's addressed, no new strategy will save you. The solution: a clear, structured path out of the trap. This problem cannot be solved by trying harder, because what's sabotaging your trades is not a decision. It's an automatic, unconscious mental process. So the solution must work at the level where the error is created. Here is the solution, clearly and precisely, in 4 parts. 1. Training awareness, exiting the default mental state. The brain's tendency to link the present to past pain is automatic. It happens without your permission. If you remain in your default mental state, this error will repeat forever. Why? Because the default state of the mind is reactive, not objective. When a breakout appears, the unconscious mind instantly scans memory. This looks like the last one. Last time this failed. I know how this ends. And before you even realize it, the association is complete. Awareness is the interrupt. Only when you become consciously present in the moment of decision do you regain control. Awareness does not remove emotion. It removes automation. The instant you notice, my mind is linking this trade to the past, the unconscious process is broken. You are no longer inside the reaction. You are observing it. That observation alone weakens the pattern. No awareness implies automatic behavior. Awareness implies choice returns. This is the first gate. 2. Building the belief that anything can happen. The second solution is probabilistic belief, not positive thinking. You must deeply internalize one truth. Every trade in the present moment is independent of every trade in the past, not intellectually, psychologically. When you genuinely accept that anything can happen, the brain stops trying to predict. Why does fear appear? Because the brain believes it knows what's coming. Once you accept uncertainty as a fact, not a threat, the need to link disappears. This breakout is not another breakout. This setup is not that setup again. This trade owes nothing to the last one. Independence breaks association, and when association breaks, hesitation weakens. 3. Understanding the mechanism is already a solution. Before now, you were repeating the same mistake without awareness. You thought the market was tricky, you lacked discipline, the setup was unreliable. You didn't know what was actually happening. Now you do, and this matters more than you think. Once the brain understands a hidden mechanism, it cannot fully unsee it. Each time hesitation appears, part of your mind now recognizes. This is memory interfering with probability. That recognition creates a new mental pathway. At first, the old habit still wins, but the unconscious starts adjusting. Understanding plants the seed of correction. 4. Repetition, until it becomes automatic again, this time correctly. This process does not disappear overnight. You are not deleting a habit. You are retraining one. Awareness must be practiced. Independence must be reinforced. Recognition must be repeated. Over time, awareness becomes automatic. Emotional carryover weakens. Execution stabilizes. Eventually, objectivity becomes your new default state. And that's the real goal, not perfection, not fearlessness, but a mind that no longer sabotages probability without your consent. That is how this problem is solved, not by force, but by understanding, repetition, and conscious presence. And only then can your system finally work the way it was always meant to. If this resonates with you, subscribe to the channel so you don't miss the upcoming insights we'll be sharing. We'll continue breaking down trading psychology, execution, and probability clearly, honestly, and without noise.